One wrong checkbox on your unemployment application can delay your benefits for 4 to 6 weeks or longer, and in most states, you can't get paid for weeks before you filed. So every week you wait could mean hundreds of dollars in benefits you'll never get back. In this video, I'm going to walk you through filing your first unemployment claim step by step so you can avoid the most common mistakes and give your claim the best chance of moving smoothly. If you've just lost your job and you're staring at that online form thinking, what if I mess this up? Take a breath. You're in the right place. Hi, I'm John. I've spent over 30 years working inside unemployment insurance systems, both in a state agency and helping modernize UI computer systems across multiple states. I've seen thousands of claims move through these systems, and I can tell you, most delays don't happen because someone did something wrong. They happen because people are confused, rushed, or scared when they fill out that very first claim. So today, we're going to slow this down, walk through what you need, what you'll see, and how to answer the tricky parts honestly and clearly. I know this is detailed, but I've added timestamps in the description. If you need to jump to a specific section, like understanding separation reasons, you can click and go straight there. Quick disclaimer, every state runs its own unemployment program with its own rules, deadlines, and forms. In this video, I'm giving you general guidance, the things that are usually true almost everywhere. Always double-check the instructions and deadlines on your state's unemployment website or in any letters or emails they send you. If your state's rules say something different, your state wins. Let's start with the biggest timing question. When should I file? In most states, the answer is file as soon as possible after you are no longer working or after your hours are significantly reduced. Don't wait for your final paycheck. Don't wait weeks to see what happens. Here's why this matters. In most states, you can't get paid for weeks before you filed. So every week you wait could cost you hundreds of dollars in benefits you'll never recover. The clock on your benefits usually starts when you file, not when you lost your job. You might hear terms like benefit week, waiting week, or base period. Super quick, plain language version. Benefit week, the week for which you are claiming unemployment benefits. Waiting week. In some states, the first week you are unemployed is unpaid, but you still have to claim it. Think of it like your deductible for your car insurance. The first X amount of dollars for your car repair comes out of your pocket. Similarly, in unemployment, the first week you are unemployed, you don't get paid. Base period, the 12 to 18 month period in the past that the state looks at to see how much you earned. If you haven't worked long enough in the standard base period, many states have an alternate base period that uses more recent wages. We will go into more detail regarding base periods in future videos. Here's the key point. Even if your most recent wages aren't in the system yet, file your claim now anyway. States rarely let you backdate claims to cover weeks you waited, so those benefits are generally gone for good. Now let's talk about where to file. And this is where understanding your claim type can actually make a significant difference in how much you receive each week. For most people, you file in the state where you physically worked most recently. That's straightforward. But if you worked in multiple states during your base period, you might qualify for a combined wage claim, called a CWC claim. In a CWC claim, you get to choose which of the states where you work to file in, and you should absolutely pick the state that will give you the highest weekly benefit amount and/or the longest duration. In upcoming videos, we will go into detail regarding CWC claims. If you worked for a federal agency like the Postal Service, Veterans Affairs, Social Security Administration, Department of Defense, or any other federal civilian job, you'll file a UCFE claim, unemployment compensation for federal employees. You still file with the state unemployment office, not a federal office, but there are special rules as to what state must handle your claim. Similarly, if you recently separated from active duty military service, Army, Navy, Air Force, Marines, Coast Guard, NOAA, or Space Force, you'll file a UCX claim, unemployment compensation for ex-service members. Just like UCFE, you file with the state unemployment office, and there are special rules regarding in which state you must file. Generally, you just file a generic unemployment claim. and most state systems will automatically determine what type of claim you're filing based on the type of employer you work for. We'll cover all 3 claim types in detail in future videos, including how to pick the right state and maximize your benefits. Before we move on, there's one more which type of claim question that trips people up all the time. Is this an initial claim, a reopen claim, or an additional claim? Most systems will try to figure this out for you, but it helps to understand the difference so you click the right button. An initial claim is exactly what it sounds like. This is your first time filing for unemployment. Or you filed before, but that benefit year has ended and you need to start a completely new claim. Most states set up benefit years that last 52 weeks from when you first filed. If that year is over, you file a new initial claim. If you're watching this video because you just lost your job and you haven't filed for unemployment in the past year or more, you're filing an initial claim. A reopen claim means you already have an active claim on file. You stopped certifying for benefits, or maybe you were disqualified for something like lack of childcare or transportation, but now that's resolved. For example, you've got your childcare sorted out, and you're still within your original benefit year. The key is you're going back to your existing claim. Same benefit amount, same benefit year. You're just picking up where you left off. An additional claim is different from a reopen claim in one key way. You actually had another job separation. An additional claim means you have an existing unemployment claim with an active benefit year. You went back to work at a new job. You lost this new job, or this new job reduced your hours, and your original 52-week benefit year hasn't expired yet. Here's the important part. When you file an additional claim, your weekly benefit amount and maximum benefit amount stay the same as your original claim. The state doesn't recalculate using your new wages, not until your benefit year ends and you file a brand new initial claim. As long as you still have a balance left on your claim, you can start collecting benefits again. Let's look at an example. You filed an initial claim in January 2025. You got a $300 weekly benefit amount. You collected benefits for a few weeks, then got a new job in March. Great, but then you lost that job in June. Your benefit year from January still has 6 months left. You file an additional claim, not a new initial claim, because you're still within your benefit year. You'll get the same $300 weekly benefit amount you had before, even though you just earned new wages at that job you worked from March to June. So quick recap: initial claim, first time filing, or your benefit year ended and you need a brand new claim. This is when your benefit amount gets calculated. Reopen claim, you stopped certifying within your benefit year and now you want to start certifying again, same benefit amount. Additional claim, you had another job separation within your benefit year, same benefit amount, but it's a new separation from employment. The key difference between reopen and additional: with a reopen claim, you just stopped certifying. With an additional claim, you actually went back to work and then lost that job. When you log into your state system, it will usually ask you, are you filing a new claim or returning to an existing claim? Now you know how to answer that. And if you're not sure, most states have a phone number or chat feature where you can ask before you click. It's worth double checking because filing the wrong type can delay your payments by weeks. Next, let's talk about what you should have in front of you before you even click Apply. Think of this as your pre-filing checklist. Personal information. Full legal name, social security number, or other ID if your state uses it. Date of birth, mailing address and email, phone number. Employment history, usually for the last 18 months. Names of all employers, employer addresses and phone numbers. The dates you started and stopped each job. Your normal hours and pay rate, whether you work full-time, part-time, or temporary. Reason for separation for each employer. Special documentation you might need. If you work for a federal agency and are filing a UCFE claim, you will likely need your SF-8 and SF-50 forms. If you recently separated from active duty military service and are filing a UCX claim, you will need to provide your DD-214. Wage information. The state unemployment agency usually has a record of your wages, but there are sometimes errors in the wages. If your wages are incorrect, you will be asked to provide recent pay stubs, W-2s, or possibly 1099s. Payment information. Bank routing and account number if you want direct deposit. Or be ready to accept a state debit card if that's how your state pays. Most states strongly recommend direct deposit. It's faster and more secure than waiting for a debit card. The goal here is accuracy, not perfection from memory. If you don't remember exact dates or pay, use your documents. Don't guess wildly. Most people file their unemployment claims online through their state's unemployment website. Online filing pros. Available 24/7 in many states. You can go at your own pace. You sometimes can save and come back. Phone filing pros. You might get help from a representative. Good if you don't have internet or you have accessibility needs. Many states also have in-person help at career centers or workforce offices. If you can, I recommend online filing, and that's what I'll walk you through next. But choose the method that works best for you. Step 1 inside the portal is usually creating an account. You'll likely be asked to create a username and password, set up security questions, provide a working email address, maybe set up multi-factor authentication like a code texted to your phone. Please write this information down somewhere safe. You'll need this same account for weekly certifications, messages from the agency, and checking your payment history. After your account is created, you'll start the actual unemployment claim application. The first sections usually cover your personal identity information. Your name, social security number, and date of birth, current mailing address, phone and email, whether you can legally work in the United States. Tips. Make sure your name matches what's on your social security card and W-2s. If you recently moved, double-check your address. This is where important letters may go. I know this feels like a lot of information coming at you. Here's the good news. In most state systems, you can save your progress and come back later. You don't have to finish this all in one sitting. If you're watching this while you're filling out your application, this is a good place to pause and take a break. Get some water, stretch, and come back when you're ready. Take breaks if you need to. Get your documents together. It's better to be accurate than fast. However, remember to finish up your claim by the very next Saturday night, because many states will make you start over if you fail to finish the claim before the weekends. Next up, employment history. This is where a lot of people get nervous. The form will usually ask for all employers in your base period, not just the last one. That might include full-time jobs, part-time jobs, seasonal work, sometimes temp agency work. You'll be asked for employer name, address, and phone. First day you started, last day you physically worked. Your usual hours and pay. Common mistake, guessing dates wildly. If you're not sure, use your pay stubs or calendar to estimate as accurately as possible. Important note, if you work multiple jobs at the same time, most states want you to report all of them, not just the one you separated from. When in doubt, include it. The agency will sort out what matters. Now we hit the section that causes the most delays and requires the most attention. Reason for separation. This is arguably the most important part of your entire application. The system might give you choices like lack of work, laid off, fired, discharged, quit, resigned, leave of absence, still working but hours reduced. Just a note on still working but with reduced hours. Even if you are still working but your hours are significantly reduced, you might still qualify for partial benefits. 3 golden rules for this section. 1. Always tell the truth, even if it's complicated or uncomfortable. 2. Be clear and specific, not vague. 3. Provide enough detail so the agency understands What happened without having to play detective? Let me show you what I mean with 3 examples covering the most common separation types. Example 1. Laid off. Here is a good explanation. I was laid off due to lack of work. On October 15th, 2025, my employer told me my position was eliminated because of budget cuts. My last day physically working was October 18th, 2025. The following explanation is not particularly helpful. I got let go. Example 2. Quit. Voluntary resignation. Here is a good explanation. I resigned on August 1st, 2025, because my doctor restricted me from lifting more than 10 pounds due to a back injury. My job required lifting 40 to 50 pounds regularly. I told my supervisor about my restriction, but there was no lighter duty work available. My last day was August 15th, 2025. The following explanation is not particularly helpful. I quit due to personal reasons. Example 3. Fired, discharged. This is a good explanation. I was discharged on September 1st, 2025 for attendance. I missed several days in September because my car broke down and I was not able to call in before my shift started. But my last absence was due to being sick. I received prior written warnings about attendance on August 5th and September 10th, 2025. Notice the pattern in all 3 good explanations. What happened, laid off, quit, fired. When it happened, specific dates. Why it happened, budget cuts, medical issue, attendance issues. You're not writing a novel, but you are giving the state enough detail so they can understand what really happened. If your separation is complicated, maybe you quit, but you think you had good cause, or you were fired, but you think it was unfair, or your situation doesn't fit neatly into these examples. Still explain it clearly and honestly using that same pattern. What, when, and why. Be honest about what happened. If there's a difference between what you report and what your employer reports, the agency will contact both of you to sort it out. That's completely normal and happens all the time. Important. We're going to have an entire video on the adjudication process. That's what happens when the agency needs to investigate the reason why you were separated and make a determination on your eligibility. We'll cover every type of separation in detail. What counts as good cause to quit? What is and isn't considered misconduct? How to prepare for fact-finding interviews? What happens when you and your employer tell different stories? For now, just remember, specific and honest beats vague every time. Use that what, when, why formula, and you'll be in good shape. You'll also see questions about money you earned or will earn around the time you stop working. This can include your last week's wages, vacation or holiday pay, severance or separation pay, bonus pay, pension or retirement payments. Common mistake, treating severance pay like regular wages. Many states ask separate questions like, did you receive severance? How much? What period does it cover? If you're not sure how your state treats severance, answer the questions honestly and exactly as your employer explained it to you. Don't try to massage the answers to speed up your claim. That often has the opposite effect. The agency will tell you how it affects your weekly benefit amount. Your job is just to report it accurately. If you're a union member, contact your local union office and ask if they have a SUB plan. That stands for Supplemental Unemployment Benefits. Some unions have plans that add to your unemployment check. A few golden rules for accuracy. Be honest about what happened. If there's a difference between what you report and what your employer reports, the agency will contact you to sort it out. That's normal. Never hide other work. Part-time jobs, gig work, or side jobs can affect your claim and future weekly payments. Keep copies of everything you submit, print to PDF, or take screenshots. Remember, unemployment systems are designed to catch mismatches and suspicious patterns. Clear, honest answers are your best friend. Intentionally providing false information is fraud and can result in penalties, overpayments you have to pay back, and even criminal charges. Near the end, you'll usually see a review screen summarizing your answers. This is your last chance to catch. Wrong dates, misspelled employer names, incorrect wages, a wrong reason for separation you clicked by mistake. Take an extra minute here. It's much easier to correct something before you submit than after the agency starts processing. Then you'll hit submit and usually see a confirmation page or number. Do not close your browser until you see that confirmation. Write down or screenshot your confirmation number and the date you filed. Quick note, what if you realize you made a mistake after you hit submit? Don't panic, and definitely don't file a second claim. Most states let you call or send a secure message through the portal to correct information. Just don't ignore it and hope it goes away. Be proactive about fixing errors. So you filed. Now what? After you submit your claim, most states will create a claim in their system using your information. Pull wage data from employers and other sources. Check for potential issues like conflicting separation reasons. Mail to you or provide important documents in your portal like a monetary determination or request for more information. A few key expectations. Filing a claim does not mean you're approved. If you were laid off due to lack of work and your employer confirms it, you might not receive a decision. As long as you start your weekly certifications, in this case, you will likely begin to be paid. However, if you quit or were discharged, you will receive an official determination stating if your claim is approved or denied. Most states attempt to issue these determinations within 21 days. However, even if you haven't received your decision, you must start your weekly certifications, a topic in our next video. You may need to verify your identity. Watch for messages or letters about this. States use differing methods to confirm identity. You may need to register for work or with a workforce agency within a certain number of days. We will discuss this topic in a later video. In most states, you'll see your monetary determination within 7 to 14 days, but it can vary. This monetary determination tells you how much you will receive in unemployment benefits each week, how long you can receive those benefits, and the maximum amount you can receive on your claim. Some states are faster, some are slower, especially during high claim periods. And again, this is very important. You'll usually have to start filing weekly or bi-weekly certifications to actually get paid, even before you get a final decision. If you disagree with any determination, you'll have appeal rights. We'll cover the appeals process in a future video. To avoid the black hole feeling, make it a habit to log into your account every few days or at least once a week. Check your claim status. Read every message and letter from the agency. Respond quickly if they ask for more information. Many people miss deadlines simply because they don't open their mail or portal messages. Don't let that be you. Let's quickly recap the biggest mistakes that delay claims. Waiting several weeks to file after losing your job. Entering wrong separation dates. Listing the wrong separating employer. Being vague about why you left. Not reporting severance, vacation pay, or other income. Ignoring letters or portal messages. If you avoid these, you're already way ahead of the game. Take a breath. Filing your first unemployment claim is a big step, but now you know what to expect and how to avoid the most common delays. Here are your 3 big takeaways. File as soon as possible after you stop working or your hours are significantly reduced. Be accurate and honest, especially about your reason for separation and any other pay. Keep copies of everything and check your account and mail regularly. In the next video, I'll walk you through weekly certifications. If this was helpful, hit like so more people who are stressed and newly unemployed can find it. And subscribe so you don't miss the weekly certification video. You're going to want to understand that process. And if you've just filed your claim, comment "filed" below. I'm working on a simple claim filing cheat sheet that you'll be able to download and use as you go through this process. You're not alone in this. You're taking action. That matters.